All right. Hello, everybody. I'm Frank Gruber, the co-CEO and co-founder of Establish, the consultancy that helps organize organizations with their innovation, startup, and communication strategies. We also manage the Startup of the Year community and program that hosts an annual summit where we invest in some of the top companies from our program via our investment arm, Establish Ventures. I'm also a venture partner with NextGen Venture Partners, which also invests in early stage and some Series A and sometimes even further companies. Today we're going to be talking about some of the investment trends and how startups might find investors at the right time, and both from a startup perspective, but also really about investors finding the right startups and vice versa. So today, if you want to be a part of the conversation, you're already here. You're in the chat. Just type your questions, and we'll love to try to incorporate some of those questions into the conversation. We love to kind of have the interactivity here. It's the great thing about a platform like this. We're not just watching TV. We're actually involved. So get your fingers ready to ask some questions, and hopefully you'll find some interesting knowledge and be inspired by this conversation. Also, if you're out there and you want to multitask, I guess, go over to Twitter or other devices like that, or other places like that. You can use the hashtag UnValley2020. That's the hashtag we're following today. I'm joined today by two investors. I'd like to first kick it off by doing some brief intros. Monique Vilma is she leads Mucker Capital out of Nashville's office, investing in early stage startups across the Southeast. She's also the co-founder of Build SE, a community of startup founders and ecosystem partners committed to companies building in the Southeast. Prior to Mucker's investment team, she was also an early stage venture capitalist, which began in 2013, leading investment relations at a couple of different firms and Velos Partners, and then recently Core Innovation Capital. She loved startups and began her journey in the startup land in 2008 when she interned for Tom's Shoes. Pretty cool. I love that company and their mission. And she's obviously been right in it since. And so welcome, Monique. Thank you so much for joining us again. Great to see you.
Nice to see you. So
I didn't know the Tom's Shoe thing. That's new to me. That's pretty cool.
Yeah, that was a full-time, unpaid internship, middle of college, and I became addicted to startups ever since. So that was really the origin story there.
Awesome. And the other origin story is interesting and has actually influenced a lot of businesses to do the one-for-one kind of model, and obviously there's a really positive impact. All right, so next up, let's introduce our other guest today is Alice Vilma. She's actually began her career at Morgan Stanley in 1999, right out of college. Later, she attended Harvard Business School and rejoined the firm in 2009. She's the managing director of multicultural client strategy team at Morgan Stanley. And this role, works in partnership with connecting multicultural businesses, business communities by identifying, developing, and executing commercial strategies with corporate, government, institutional, and individual clients. That's a mouthful. You are busy, I'm sure. That's a lot of different constituents to be organizing. And then also Alice is the co-head of the Morgan Stanley Multicultural Innovation Lab, an accelerator that invests in and supports tech and tech-enabled startups with multicultural or women founders. Welcome, Alice.
Thank you so much for having me.
All right, thank you so much for both joining us. Let's start each of you by sharing a little bit more about your roles and what kind of has changed this year in regard to your investment, if at all, because I know it's been a wild 2020. We're almost at the end of it, and I just want to hear from you guys. I always ask what's been different this year aside from being in your own little pod and world, right? Who wants to go first?
Alice, you want to take it away?
Sure, I'm happy to go first. So in my world, particularly in the innovation lab, we're making early stage investments in tech and tech-enabled companies with a multicultural woman founder, as you mentioned. And so what has changed really is we would do our program in-house, and we offered free real estate in addition to the cash investment that we offer, as well as the connections to the Morgan Stanley network, as well as external networks and content around a curriculum. And so we would do all of that in-house. And obviously we were kicked out of our house with respect to COVID the first weeks in March. So we did 1 week in-house and then quickly had to pivot into a virtual format. And so we ran this year's cohort virtually, and it was relatively seamless thanks to Zoom and all these other platforms that were there and just exploded on the scene. And so we were able to still have the same connectivity with the founders, the same programmatic features of the program, as well as the connection with our internal Morgan Stanley networks through the Zoom and virtual platforms, which was great, and really made for an interesting dynamic. Obviously, you lose the community, but at the same time, you're still able to catch even folks who you may not have caught before because they may have been traveling or not able to come into the office into New York City where we are. So that was actually great, had its pluses and minuses, but pretty seamless. And that was fantastic. Can get into it, but I'll let Monique go.
Right, no, really interesting. I mean, being in New York City in the heart of it, when we first had this pandemic kind of hit the U.S. anyway, for the with the most impact, I'd say to begin with, that had to be pretty scary, obviously, and to be able to make that pivot, obviously, bravo to you guys for keeping it going and making that happen really quickly.
Yeah, thanks. It was definitely something that we were all, fear factor set in, what's going on. And then we were forced to shut down, quite frankly, and very, very early. And so instead of throwing away an entire year of content and valuable, connections and making it impactful, we were able to pivot, and that was great.
Excellent. All right, Monique, go ahead. Tell us what you're thinking.
Yeah, to echo Alice, I think we were really fortunate in that it's been fairly seamless for us this year. We had always worked with companies that were remote and based all across the country and into Canada, the two markets that we covered being the US and Canada. So really, for us, it was an opportunity to further integrate our companies that would typically be working out of our LA office and our Nashville office in with those remote companies once everyone became remote. So that's really been the opportunity out of all of this. But in terms of our core programming and the way that we work with founders, that hasn't changed at all. We also were investing pre-COVID into companies that we had never quite met in person. And that wasn't new for us. I think that was a new adjustment for many investment teams who were used to requiring sort of that in-person interaction prior to wiring and sending term sheets. So that was also fairly seamless for us. I think the main difference for us this year has really been the volume of deal flow that we've seen. And I really it's sort of a two-part answer to why I think there's been an increase in deal flow. But, one piece of it being at the early stages where we invest, pre-seed, seed, series A, there was definitely this idea of, oh, we need to extend runway. We need to think about 2021 when we may have been, delaying our fundraise. Maybe we should move that up by 6 months, 9 months even. And so there was that increase in deal flow. And then the second piece, I think, takes more of an optimistic spin, especially at the pre-seed, in that there's just unbelievable new company creation coming out of COVID. Entrepreneurs are really the hero in much of our history, and I think are really stepping up and seizing the opportunities we're seeing in the market to kind of reimagine all aspects of life in this post-COVID reality. So there's an optimistic spin of new company creation and deal flow we're seeing at the pre-seed and seed stages. And then there's the slightly more cautious angle where companies feel the need to extend the runway.
That makes sense. And I was going to ask you a couple follow-ups to that. So I feel like there's a lot of people who, are comfortable with making that kind of first, encounter online or whatever, and then maybe writing a check, and I think it's a bit different. There's a couple of things. So it's different early stage, right? I think early stage, people are okay with it. They have a risk tolerance to say, okay, I'll throw a little bit at it. But what I'm curious is, from your perspective, the bigger checks, right? Like the two or bigger, $2 million, $1 million, whatever. Those bigger checks into companies or more. Have you seen that a lot? Like, are you seeing like people a little bit, more cautious about doing that not without meeting people and going and seeing the office, all that kind of thing?
So we made an investment into an Atlanta company, and that was a $4 million check from us. I still haven't met them. I think the internet and being able to do your own diligence, and I joke about it, but it's kind of true in calling it online stalking of people trying to see, okay, are you real? Is the company real? Are people really engaging and using your software? And are they customers? Are they talking about you? I think that's closing the gap there. When you think about larger checks, when you're talking about VCs that are writing $20, $50, $100 million checks, what I've heard has been, quite literally double, triple masking up, flying and going for outdoor walks with people to see if they're real before they're actually willing to wire that $50 million over.
That's big. Wow. Okay, that's interesting. And then secondly, just to address it really quickly, Nashville. You're in Nashville, and that's obviously we're at the Unvalley 2020 event here. Can you just give a quick brief, like why Nashville for Mucker? Because then you were in LA as well.
Yeah, so I'm an LA native, had never left, and I know the ins and outs of the benefits of being a native somewhere. And I also have now become a newcomer in Nashville for the past 3 years and see some of the benefits there as well. I think for Nashville, really there are lots of similarities between Nashville and LA in terms of the ecosystem and the varied industries that are present around the table, the university systems here, and really just, overall the geography. It's a bit of a sprawl of neighborhoods and different pockets and corners of the city. So there's definitely some similarities there. Nashville's really just incredibly geographically advantaged. If you look at the map, there's something like over half of the US population within a radius that's accessible by driving. Just hopping in the car, you could actually access so much of the US in a very efficient way. And I think that becomes really attractive for a couple of things. But I think for companies, namely, it has to do with accessing your customer base. Whether you're talking about large corporations, Fortune 500s, all the way down to small businesses and consumers, they're all within earshot of Nashville. So I think it's really a combination of the geographic advantage and proximity to customers, as well as Nashville's, growing role as a tourist destination. There's a big argument to be made in favor of consumer companies that are setting up shop here, in addition to the very established healthcare hub that we've always been. So I think you have healthcare, you have academia. We also have quite a bit happening in the transportation space, and then all the way through to consumer. There's a ton of growth.
That makes sense. And I don't know if this is true or not. We should probably Google this, but or search for it real quick. Is Nashville the road trip capital of the world then, if it's that accessible? I mean, I think that should be its new slogan. We're the road trip capital of the world because you can get everywhere fast. I don't know. We heard it here first.
I don't know that piece, but I have a very interesting map thanks to the Nashville Chamber of Commerce that illustrates
That's possible. That's possible. Right, exactly. Okay, let's keep moving here. What are you looking for both in relationships you build with startup founders? Alex, go first. What are you trying to do when you meet these founders? What's the kind of relationship you build?
Yeah, when we first meet founders, we're trying to first understand the company. Our accelerator is sector agnostic, and so we're looking to see what they're doing, where they're focused, and how they're thinking about executing on their business. The second thing that we're looking to do, particularly for inclusion into our program and our investment, is if they have a product in place and how far along the company is. So we like to generally have a product in place. We like to see paying customers and the ability to convert pilots into paying customers and or take your MVP and convert that into a product. Even if you're going to make a change or a pivot in the business, the ability to at least have established some type of product market fit is very important for us in getting to know them. And then secondly, we're also looking at the founder, and we're trying to understand, quite frankly, what's the connection to the problem they're trying to solve in the company they've created, as well as how they're thinking about continuing to grow and persecuting that market, and why they're the natural owner, if you will, of that opportunity to take it from its start to its eventual end, whatever that end may be in terms of acquisition or tapping public markets, et cetera, and then the quality of the team. So obviously, if you have a tech company, it'd be nice for someone to have a technical background, the team, and et cetera. So those are generally that we look for.
That makes sense. Monique?
Yeah, so we cover a couple of different round sizes within the early stages. So I'd say it's pre-seed, seed plus, or whatever comes after seed.
Names don't even mean anything anymore. They just keep changing, and the numbers.
Yeah, names mean nothing. I will say that the way we think about differentiating between stages has to do with the maturity of the company's go-to-market strategy and how much they can really be able to scale their strategy. So, we have some companies that come to us and say, hey, we're raising our seed round, we're raising our Series A, but we would really put them in the pre-seed category based on the proof points they have from the market. And so we like to say that, the market is always smarter than we are. We want to see that validation from the market. We want to see feedback from customers. We want to see that you have put in your own due diligence into really understanding the landscape. And to Alice's point, the basis of our entire thesis, beyond just general software and tech-enabled companies, is really to what extent do you have a unique market insight? So I think it's incredibly important for the founder to have a direct connection to their potential customers and to that market opportunity. We see everything from people who have deep domain expertise to someone who might be lacking the domain expertise, but has a particular skill or window of opportunity into something and knows how to hire the right team. But if they have no connection whatsoever to that market, we see a real correlation between that and their ability to become a high growth business one day. So we're really looking for, again, the maturity of go-to-market. We're happy to jump in super early, as long as you're willing to acknowledge that it is very early. We're also happy to jump in just as you're about to hit that hockey stick growth and looking for a larger check. And we're also looking just in general for completeness of thought. To what extent have you really investigated the opportunity and have a real plan to put in place?
Like a big vision. That makes sense. And I think this is kind of probably be a quick one too. You kind of addressed a little bit both, but at what point, and because we're all about like how do you get in front of investors in the right time, right, and that kind of thing. So when is the right time to approach both of you with your company, right? It's what phase are you looking for, and to build that relationship, I guess you could say. Because I know you may not invest right away, but what would be for all the startup founders out there listening, watching, when should they start thinking about connecting?
Yeah, I'll start. I think the right time. So I would take that in two steps. The right time to meet could be any time, but at the same time, you may not get investment, or you may not be right for the program. And right. So if you're, and you should be clear about that. So if you're just trying to understand kind of what investors are looking for, and you're just kind of getting your feet wet, might make sense to have some friendly conversations, so that you can kind of be guided into how you think you want to guide and organize your company to be able to speak credibly with the investor community. Back to Monique's point around being super credible with respect to the problem you're trying to solve. And it has to be clear. But if you come to talk to me, I'll tell you, if you're early, you're early. I'll tell you sometimes you might be too mature to work with Morgan Stanley. We have other ways to work with you. And then in terms of actually getting investment, you really want to talk about why now is the right time, what exactly you'll be doing with the money that you're investing, why, how this investment leads to the growth of your business and et cetera. So I would say that's probably the right approach for myself.
That's great. Yeah, definitely.
Yeah, I would say exactly what Alice said. Whenever founders ask us, how long is your process? What does this look like when reaching out? I say it can take anywhere from 6 days to 3 years to get investment from us. I understand the frustration from the founder's perspective because we always have some companies in our portfolio that are raising. So we're also sitting in that seat of helping them navigate a raise. But I understand the urgency and wanting to get an answer. And I think it makes perfect sense from the founder's perspective. And from our perspective, to Alice's point, it might not be the perfect fit today, but we would love to, if we will acknowledge if something's just out of scope for us or not going to be a fit. But then there's other situations where the company could be literally a couple of weeks away, and we would want to see a couple of specific things come together before we'd be willing to jump. And I think sometimes founders, want to have that answer right away. But then the founders who are willing to hang around and really engage with us in more detail around a few things, those do turn into checks, and they continue to. So I think it's a matter of reaching out, being specific about where you are and why you're reaching out, making it very easy for us to understand in a quick capacity what it is that you're working on and what you're looking for. And then having some patience with us as we really think through your market opportunity and how we can best support you. Well,
that makes sense. And I think it's being direct is different than some of the the stuff that's out there, people have said for years, like when you're looking for investment, ask for advice, and vice versa, right? When you're looking for advice, ask for investment, I guess you could say. So that old adage is out there. Do you agree with that? It seems like you're more like, tell me what you want. What are you trying to do? Like, be a little bit more direct.
I think it's more about just being patient. You know, if you communicate where you are, I love when founders say, hey, we've got X, Y, and Z going on. We heard about Mucker. We know one of your portfolio companies. They encouraged us to reach out. Let me know if you'd be interested in connecting. That's so much more accessible than, hey, my name is so-and-so. Can you hop on the phone tomorrow, with like no context? Because then I'm like, well, wait, huh? What are you doing? And who are you? And what's going on? And how can I don't even know how I can help. I don't know what you're working on. So I think context and just adding that human element is really helpful.
Okay, definitely.
Yeah, I would just second that point. You want to think of those conversations like you're meeting people for the first time and having some common sense around the conversations. You can always take the conversation and guide it toward what your goals are, and being clear from that perspective. But to your point, just calling someone out of the blue, it's almost like cold calling, right? Just calling to invest in my company, that might have a type of reaction.
Oh, yeah, that makes sense. It's about building the relationship first, obviously. Okay, so due to 2020's, being such an interesting year and the pandemic, seeing a lot of companies leaving the coast and relocating to smaller cities for various reasons, family reasons, financial reasons, lifestyle, whatever. Are you seeing that wave? And if so, what should some of these new transplants know about finding the right investors at the right time as they're now moving into these new locations?
Yeah, so from my standpoint, I think that first the question becomes, you're moving into a new location because why? And so you have to really think about how that's going to affect the business and what opportunities you're going to get from this location and being here. And then I would say, just from my standpoint, the investor base, I don't think it changes as much. Unless you're moving from the coast and there are investors who specifically won't leave the coast or tend to have a tendency not to. But I would say that generally what we've been seeing in the VC community is investors looking beyond the coast, because those are where the deals are. And so you're seeing a lot of firms push past the general coast, the research triangles, et cetera, that you've seen, and start to look for more investors elsewhere. And that's the general trend. So I don't think the thoughts around who should invest in your company would change dramatically.
That makes sense.
Yeah, I definitely second that. I think the trend of VCs being more and more open to investing in companies in different cities other than their own has been building the last couple of years. I'd say that COVID has really broken that wide open, and we will see a completely different level of engagement and interaction after this, starting in 2021. So I think as long as founders have, to Alice's point, a real explanation for how they will continue to be competitive and coordinate as a team that's operating remotely entirely or partially remotely, or have chosen to double down on a given city. I think making the argument in favor of being close to your customers, having some advantage there, that resonates really well with investors. And I think increasingly investors are deciding to pick up and be in other locations. Like with Mucker, we've been in Santa Monica, California for the last 10 years. We opened up our brick and mortar space here in Nashville now over 2 years ago. And we find quite a bit of benefit in having proximity to our founders so that we can come to them and they can visit us too. So I think having some fluidity between being able to be around, but also respecting what's best for the company as opposed to what's best for the investors, then that's really the big opportunity we'll see unfold.
Okay, great. And we've got about 5 minutes. I'm getting the 5-minute warning here. So I'm going to try to power through a couple questions that came in from the chat, but then I've got one more that's kind of a trend similar to what we just talked about. So let's do with the trend first, because it kind of reminded me of this, but I definitely want to get back to those other questions from the chat because I want the interactivity. So recently there was a new PitchBook report showing that the numbers have dropped in female funding into startups. This is the first time in like a while, since 2017, that's been the case. So wanted to just touch on that really quickly. We're also, I guess one of the other things that came out of that is that the investors who had recently or previously written bigger checks to female founders are now writing smaller ones. I just want to get your quick thoughts on that, and hopefully we can do it quick so we can get those other questions.
Yeah, I'm happy to kick this off, Alice. I'll give you a break.
Thank you very much.
So, COVID has influenced the markets in quite a few ways, and if you think about the full capital stack, all the way from LPs down to high risk asset class players like VCs and so on, there's definitely this risk aversion. And something that Alraise has pointed out with real data, and I know Morgan Stanley is doing incredible work along these lines as well. So I defer to Alice on that, but there's a real correlation between having women check writers and having women founders receiving funding. Mm-hmm. And the more that we look at those numbers, we see that women-led companies outperform. And when you think about really the suboptimal performance of the VC asset class over the years, there's reason to believe that the more money that goes into women founders who are outperforming, the better the asset class will perform. And so we have to get past this hump of the COVID risk aversion, people clamping down and investing in their direct connections and people that they know. Right. And at the same time, we're watching this graduation of people who are entering VC, who are women who are representing different backgrounds than we've seen historically in venture, that are making the climb to higher kind of more senior ranks at funds, are starting new funds. So we have more and more GPs that are women and underrepresented groups that are making that climb in the next couple of years. So while the numbers are not reassuring currently, I'm entirely optimistic about the future. And I think the important piece is to really focus on investing in that cohort, retaining that cohort, and making more and more access to roles in venture capital.
That makes sense. Alice, if you can quickly, I don't want to cut you off, but if you can quickly kind of share anything else on that. And then I wanted to ask this one question about connecting with you all, with founders.
Yep, completely agreed with everything Monique said. I would just add that you're also seeing, this is the reason why we exist, to continue to push this metric. And we're also looking to break that pattern matching and the risk aversion by having some credibility in the space. Oh, Morgan Stanley's in. Let's see what
right.
we can invest.
That's a big stamp of approval. So I can imagine that's really important with everything you guys are doing. So that's awesome. Okay, so let's switch gears here. What are some red flags about founders that make you pause before investing, even if the business opportunity is robust? So this is from the chat. Want to get that in there. What are think about some of the pitches?
I think one thing that comes to mind for me is coachability. I think, and that really just speaks to the ability to iterate, listen to what the customer or the market is telling you, iterate on the product, and keep going to offer and to continue to delight your customers. And i.e. that would help revenues and et cetera. So that would be a big one for me.
Mm-hmm. Great.
The short version is self-awareness. So being aware of what you're good at, what you're not good at. I think sometimes founders will rush to try and have all the answers to everything, and that actually exposes blind spots and becomes a red flag for us.
So it's okay to not know everything.
Yes.
Right, exactly.
Actually,
all right, great. That exactly, self-awareness. All right, so one more question, and then wrap with so how people can connect with you. So real quick, close your eyes. Think about we're going to do this exercise. Close your eyes. Think about your favorite entrepreneurship or entrepreneur relationship, and can you boil down and describe what they do right? You got to close your eyes first.
I'd say transparency. Transparency and vulnerability.
Okay.
That's my short answer.
Great.
Yeah, I don't have much else. Transparency, vulnerability, because that's what we can actually help. And so
right.
that's the name of the game.
Excellent. All right. So real quick, where can people that are following or want to connect with you find you? I think they can do it via the chat. They can click on you or whatever. But is there another better way to connect, or how do you prefer?
Yeah, you can link me in, and also Alice Vilma at morganstanley.com.
All right. Thanks, Alice.
Sorry, Alice.Vilma at morganstanley.com.
I'm just Monique at Mucker.com. It's on our website. I'm also on Twitter. I'm known to opine on various things from time to time at Monique Via. no gaps, not the CEO of Thomson Reuters Foundation, the other Monique Villa. And yeah, just really, really happy to connect with you all and appreciate having the opportunity to talk about this.
Same.
Thank you so much for being here today and sharing your thoughts. Thank you everyone for coming today. This is a really important thing for anyone trying to start up or find capital. And I think you answered a lot of people's questions today. So thank you so much.
Thanks so much, Frank.
Thank you.
Everyone be well out there.